Hi, everyone. I'm Tung, managing partner at Notable Capital. I'm here with founder and CEO of Parafin, Sahill Poddar. Thanks, Sahill, for joining us.
Thanks for having me, Hans.
I'm excited to announce that we are leading Parafin Series C funding and are looking forward to partnering with Sahill and his entire team. This partnership underscores our belief in Parafin's transformative role in embedded fintech, empowering by working through big partners, small businesses through providing access to capital and leverage data to provide better services. I have known Sahill for, 3-4 years now, having started a journey as a small personal investor. Embedded finance is one of those big disruptions and also enablers in fintech, in financial services, transforming the way that small businesses access capital through big platforms that they already use that have a lot of transaction data on them. So, Will, when did you start thinking about this problem, and why did you choose to tackle it by working with big partners?
Thank you for having me, Hans. Parafin's mission is to grow small businesses. Small businesses, despite being the backbone of the U.S. economy, employing over 60 million people, contributing to almost half of the U.S. GDP. Unfortunately, banks do not have their backs when it comes to getting access to financial services, in particular financing. Incumbent methods systematically bias against women-owned businesses, minority-owned businesses, or newer forms of business lines. You can be a seller on Etsy or Amazon and run a profitable business for several years and yet not cross the EBITDA threshold that is needed for bank financing. Moreover, incumbent methods use archaic techniques such as personal credit scores, require personal collateral. All of this hinders and deters a business from getting access to capital, which obviously hurts their ability to grow. Parafin's solution to this is essentially enabling the very platforms small businesses sell their products and services on, offer financial products to them. As an example, we partner with DoorDash in the on-demand marketplace category to finance their restaurants. Platforms such as on-demand marketplaces, vertical SaaS, and point-of-sale solutions are becoming more and more ubiquitous in the lives of small businesses. And as a result, enabling them helps us solve for this pressing need. And Parafin's embedded financial products essentially create win-win-win scenarios where the small business gets access to capital that they need to grow. The platform gets all of the benefits of offering these products to the small business, such as loyalty, growth, retention, and an additional revenue stream.
Yeah. As you mentioned earlier, the SMBs account for half the GDP of this country, yet not all SMBs grow equally fast. And those that seem to take advantage of the digital platforms like a DoorDash or Amazon or TikTok and so forth probably could grow at a faster rate. How did you think of a ways to partner with them, leverage data that's already there to do this?
Yeah. So historically, the space has been really difficult to serve SMBs with financial products. There's no obvious way to do that outside of bleeding, a lot of marketing dollars. And it's a highly fragmented space. But with the advent of these platforms, they have started to aggregate small businesses. As an example, Amazon has hundreds of thousands of sellers on their platform. Similarly for TikTok and DoorDash. And the emergence of these platforms essentially makes the why now moment more clear as to why this is possible today versus 10 years ago or 20 years ago. Today, there's basically enough platforms at scale out there that enable a business like ours to exist and to be able to serve both them and their underlying small business. And so this opportunity exists in the internet economy and did not exist prior to that.
Right. Speaking of prior to that, we were an investor in Square. Our partner Glenn led our investment there. And Square, through POS terminals, it made it possible for a lot of small businesses to be able to take credit cards and a much lower transaction fee or more efficiency than before. And Square then came up with Square Capital to make lending to their best restaurant partners. But all that stuff mostly offline through using data from the terminals of the transaction that the card gets swiped in. So it wasn't until DoorDash and Amazon and TikTok emerged to have all these online merchants to be able to do that. Why do you think that the existing service providers haven't seen this opportunity to do this?
And by existing, you mean like DoorDash, Amazon, and
Yes.
TikTok? So initially, if you're building a company like DoorDash or Amazon, you're going to be focused on the core, which is building a network of merchants and consumers and their ability to transact. Once that bedrock has been established, and in Square's case, digitizing payments, Stripe has done something similar with their infrastructure. Once that bedrock is established, that is sort of the ideal moment when this opportunity exists. And so this is kind of a natural evolution of how these platforms will scale and be able to serve their customers, i.e. merchants in this case, with more products. And so prior to them being at a certain scale, this should not be a priority for them. But as this scale has been achieved, this inevitably becomes a priority for them.
Right. Why don't they just do it themselves if they have all the data like Square did with the past terminals before?
Yeah, so there's a lot of advantages, which a third-party provider like us can bring to the space, which a first-party cannot have. As an example, a first-party's ability to underwrite and learn from it is restricted to the data that they have on their merchants. When you compare that to Parafin, we are, by virtue of being third-party, today we have data from pretty much every major US vertical that includes large platforms like DoorDash, Amazon, TikTok, Walmart, but also a long tail of vertical SaaS businesses. And so first and foremost, that's a data and underwriting advantage. Secondly, every first-party product, will have concentration risk by virtue of being only concentrated on that particular vertical. That asset is going to be a lot less attractive than a vertically diverse asset, which Parafin is able to originate by having the breadth of different verticals to capital market and lenders who are providing the capital for these products. And thirdly, and perhaps most importantly, the rate of learning and iteration on the product is determined by what your merchants are going to say to you as a first party, versus in the case of Parafin, we learn from things from merchants from one platform and roll that out more broadly across all of the platforms. And so our product is evolving at a much, much more rapid pace since we have a variety of different inputs that feed into it.
Yeah, this is what some of your partners told us as well. You have more data than they do. You see more, and you're iterating faster, getting smarter about how to make those decisions, control credit risk better than they can. And many of them just doesn't have their balance sheet to have lending. Makes it harder to explain to Wall Street. They're becoming a fintech company too. It just they don't want to become a bank. So that's just very interesting to see that. Whereas Square did the Square Capital, but not all platforms feel the need to do that themselves in this day and age. What is also interesting for us as we got to know you better and better is that it's pretty impressive that you guys have such a core team that came out of the Robinhood. And you guys all know each other already. You guys have a lot of experience dealing with engineering, dealing with AI and ML and a variety of matters. How did you guys decide that you want to come out and solve this particular problem versus anything else that you have seen? What other idea did you reject before doing this?
Yeah. So at a personal level, Hans, I grew up in a small business family in India. Same for one of my other co-founders, Vineet. We have seen firsthand as part of growing up there and both the opportunity that access to capital provides for small businesses and ways in which it prevents the growth of small businesses. So in some ways, small businesses are very near and dear to us. When we were working at Robinhood, we were fortunate to be part of the early team there. In some ways, it was kind of the renaissance in consumer finance. But at the same time, when you looked around, the small business space was startlingly underserved.
Right. And
there was a huge gap between what the consumers, the options that the consumers had in terms of the products they can access versus what small businesses could access. And so putting those things together kind of made it pretty clear in our minds that we wanted to serve the segment, and we started to tinker with ideas, do a lot of user research as to what made most sense.
Yeah. And we're not investing in Robinhood, but we were invested in a firm. So through the 2010s, you see that wave of consumer fintech companies emerging, and now it seems like this current decade we're in the middle of the SMB tech fintech companies emerging and doing well, taking some of the lessons from that. As you scale Parafin, what are some of the lessons that you learned from Robinhood that's applicable, even though it's a different segment?
At Robinhood, I was part of the growth team. I was one of the founding members of the growth team. My co-founder started the risk and fraud engineering team there. And so in some ways, we got to see both sides of the same coin, which is growth and risk, and building products and enabling growth while minimizing risk. And so that learning has naturally stayed with us. I say this to all of the folks that are on the Parafin team today, that if you're at an early stage company, you get to wear so many different hats, even things that you don't sign up for. My role was a data scientist at Robinhood, but I often found myself pitching to investors at times. And so having that breadth of learning, but at the same time being able to really go deep into areas that really matter, help shape our thinking, in the early days of Parafin.
Yeah. I mean, we love how your model doesn't require a lot of CAC, yet LTV is quite high. Can you share a bit just to help our viewers to visualize? You at liberty to share what's the sort of average loan size and what's the duration of the loan you provide?
Yeah. So we typically, and before I answer that question specifically, what's important to note is there's enough studies out there that show the biggest need for a small business is to get access for up to the next 1 to 2 months of their sales to be able to invest in their business, manage their cash flows, and expand their business. We therefore size our offers in the roughly 1 to 2 month of sales range for the small business. On the low end, that can mean a few $1,000s, and on the high end, that can mean a few $1 million. The typical payback duration tends to be between 6 to 12 months, and it's dictated by either the small business's sales velocity, which is what is used to repay the loan, or it has a fixed repayment schedule depending on the product.
Yeah. What are some of the verticals that you see that are popular where you get merchants or SMB businesses that are willing to accept your loan to help them to grow and expand their business?
Yeah. So the way we think about it is, we want to be as vertical agnostic as possible. Naturally we will gravitate towards in the verticals where the large platforms exist. Today, we partner with some of the largest platforms in the country. There's Fortune 1 companies like Amazon, Walmart that serve the e-commerce space. There is the largest last mile delivery platform, DoorDash, which serves the restaurant space, but also increasingly the grocery and the convenience store space. There's the fastest growing e-commerce platform, TikTok. There's a vertical SaaS called MindBody in the gym and fitness studio space, and there's a long tail of vertical SaaS spanning everything from bouncy house castle to limousine rentals. Our product is pretty much the same across a lot of these verticals. So it really depends on which are the biggest verticals in the US economy. Restaurant and e-commerce are the two biggest.
Mm-hmm.
And as a result, we naturally have more concentration there.
As you have long tail, how do you decide which type of opportunities to focus on and prioritize? As a B2B business, prioritization is still very important.
Yeah, I think we look at the market very closely and try to understand if similar opportunities exist beyond the one right in front of us. What the cost of integration, cost of serving is that opportunity, and naturally the teams are constantly iterating on reducing that cost every single day, and that's how we typically decide which verticals to go after. Another way to kind of think about it is from a risk mitigation standpoint, and so we have a underwriting exercise that our sales teams and together with our data science teams do with platforms and their data to help them gauge what the opportunity here is and if it's worth our time or the platform's time to engage.
Right. You guys are in your 4th year now, and you have been giving out about $1 billion or more per year at the current rate in loans. Is this kind of scale that you expected when you get here? You'll get here when you first start a business, and where do you guys go from here?
Yeah, our ambition is naturally to be multiples, orders of magnitude bigger than where we are today. We certainly expected to be at some large scale, given our relentless focus on building products and serving our customers. Whether that particular number, I think it's hard to comment on that. I think when we had started Parafin, if you were to assign a probability of us working with DoorDash and Amazon and Walmart and TikTok, that probability in our minds would have been relatively low. But here we are today, serving all of these platforms at once.
What were some of the when you talk to the partners, what are some of the things that they like about working with you, and what are some of their suggestions for you to be better?
Yeah. So, taking a step back, our philosophy in building products as it pertains to partners is to maximize the economic opportunity for them while minimizing the amount of effort they have to put into integrating with us and scaling the programs with us. And so that is a relentless focus for the team. That's what our partners want from us. And we work very closely with them in order to understand how could we be improving the platform each and every day so that there's more automation baked in and less effort from their end. Behind the scenes, naturally, we are abstracting cap markets, underwriting, servicing, customer support, compliance, and taking on all risk. And that's the easiest way to kind of serve our customers and also what the partners have learned to expect from us over time.
Yeah, your partners, several of them are quite global. They're not only U.S. but in other parts of the world as well. How have you guys been thinking about international expansion? I know you guys just recently started in Canada, but what are your thoughts on geographic expansion?
Yeah, so we launched in Canada earlier this year as part of our international expansion. We feel very strongly about the need for our product globally. For us, it's a question of prioritization and what are the most important markets and geos to go out to launch our products in. Fast forward to 5 years from now, I expect Parafin to be a global business serving many different geographies. I think the exact rollout plan has many different inputs that go into it, including what else could we be building for our US-based customers versus internationalizing our existing set of products.
Right. Speaking of which, I mean, you guys started with different forms of lending, and specialty lending as a category took a hit during COVID. You guys are expanding beyond lending. Wallet is one example. How do you think about complementing the existing lending-related businesses with new offerings with your US-based clients?
Yeah. So credit is the best wedge into breaking into this space. It solves for a really pressing need for the small business. But our belief has always been that, once you kind of do the hard work of providing credit for a 6 to 12 month duration, that opens up a plethora of other opportunities. The wallet and the card product is a step in that direction. With the wallet and card, merchants will be able to save money, spend money, store money on the platforms where they earn their revenue. And with spend, we have plans to go beyond platforms where the merchants earn their revenue and include platforms where merchants transact and buy goods and services on. When it comes to these products, our sort of guiding principle is to ship products that enable the merchant to have much more efficient spend management while being rewarded for it.
We're definitely living in the middle of expansion in digital economy, and even powered further by AI. How do you guys think about AI and how that impacts how you make decisions and how you service your clients?
Yeah. So to tell you a little bit about how we think about this. So firstly, my background and my founding team's background has been in data science, machine learning. We did that in our previous roles at various different places, and it is a very core part of Parafin, and it's a very intentional investment that we make. Today, the way we make offers, to all of our businesses under the hood, that's powered by highly robust and accurate machine learning models that learns from billions of data points spanning millions of small businesses.
Yeah.
And this is daily level sales data, so highly granular data, including bank transaction data, identity data, and we're constantly iterating and improving on the underlying models by essentially testing them in the wild. And so this remains a very active area of investment for us. The data science team spans PhDs across many different areas, including mathematics, computer science, physics, and engineering.
When I see the dashboards of a DoorDash and to a lesser extent, but it's for Amazon and TikTok for their merchants, and see everything kind of digitized for the merchants they work with and the suite of solutions they provide, and you guys show up as under the capital or financing link and being embedded in that platform. It is pretty impressive that the merchants who get tech, who can leverage tech, are definitely running a more efficient business and you guys are right along in there, enabling that. So I can't wait to see whether additional wallet or charge card or whatever the products you have in mind that you rolled out to these merchants, but just becoming sort of like the extended office of a CFO suite for them is pretty compelling value proposition.
That's exactly right. We feel, small businesses have been left behind in the financial technology revolution. We are here to change that by adding to their lives tools and services that they deserve and that technology today can enable and eventually will enable. And we're happy to be, grateful to be a big part of accelerating that future.
Great. All right. So in closing, you guys can see why we're excited to see how Parafin is enabling the growth of small, medium businesses in America and beyond, starting with embedded fintech and financing and potentially more. So we're definitely excited. Our platform team, entire investment team, are excited to work with you. Every single one of us are impressed by how mature and thoughtful you are. So we can't wait to do more with you guys.
Thank you for your support.
Yeah.
Excited for the partnership.
Thanks for coming.